Welcome back my dear class 12 student. This is a accountancy class and we are going through the comparative and common size balance sheet and profit and loss statement. So this chapter is known as a analysis of financial statement. Okay, analysis of financial statement. There is two part, one is comparative statement and one is common size statement. In your last online classes, I have already discussed about comparative balance sheet and comparative income statement. Here we will do the common size balance sheet and common size income statement. So what is common size income statement? What is the need of common size? You know the comparative. Comparative means the difference between two or more than among 5. And there was a base year. Suppose the base you have there is two always in company accounts 2 years already given. You have to need to make your balance sheet or your profit and loss account. There should be two accounts, a 2 years account, one is previous year, one is current year. So there is always two accounts is there. So easily you can compare the different items of balance sheet and profit and loss account, and from there you can get, you should know what is the asset in the last year and what is the asset of the current year and what is the percentage of increase or decrease in there, and that is all about the comparative statement. Now what is common size statement? Now common size statement you can compare with other industries also. Okay, suppose A and B are two industries, A and B, two industries. B is a big industry and A is a small industry, small. Again you can compare these two industry in common size statement, because here base is the same. Base is same means suppose you have got 100 marks in your total of 100, then what will happen? Percentage will be 100%. If there is a 500 of total marks of your total marks in the board is 5 marks, if then what if you get 500, then it will be 100%, not the 500%. Okay, if there is a 550 600 is the total marks, then if you got 600 out of 600, then it will also call 100%. So base is 100%. Figure is not important, the base is important. So your base is always 100%. Through this 100% you have to calculate different item. Now what will be the base, that will discuss which item and what will be your base when you do the common size balance sheet or common size income and profit and loss statement, that I will discuss. Okay, so here, so if there is a 10 crore capital and big industry, there is a 100 crore capital, big industries, if there is a 100 crore capital, then that doesn't matter actually. You can compare, you can compare and easily you can do what is the actually the base of that. If the 10 crore is the base and 100 crore here is the big company, then easily you can convert it into 100%, and through 100% you can do whatever your comparison needed. Okay, so just take a practical problem, then you can easily understand what actually I want to say. Now in your NCRT book, just go to page number 188. Here you can find illustration 5. We are just, there is a, from the following information prepare a common size income statement, means profit and loss statement. First we will do the income statement, that is profit and loss statement. And here net sales is given, cost of goods sold is given, operating expenses is given, non-operating expense is given, depreciation is given, and wages also given, and there is 2 years figure is also given. So now you start how common size statement looks like. Now there is a particulars. Now first is 2013-14 figure, that is the last year figure, and current year figure is 2014-15. Now there is a percentage of net sales. Percentage of net sales. Percentage of net sales. On the basis of sales, we will do the percentage. Now 2013-14 and 2014-15. Okay. 2-year percentage we will calculate. There is no absolute figure. Okay. We don't need any absolute figure, because if there is a two industries, one is big, one is small, then absolute figure is not very valid. Your percentage calculation will be valid. That's why I have shown you, when you get the 500 marks, the percent, if you got the 500 out of 500, that is 100%. So your basis of base is 100%. 100 is our base. And which item we will select as a base? In case of income statement, we select the base, the net sales, revenue from operation. Okay, revenue from operation, that is net sales, is your base in case of income statement. Now one by one you do. Net sales, you just write net sales, and here you just write the upper portion, you just write common size income statement for the year ended 31st March 2014. Okay, 2014. Common size income statement, oh sorry, not 14, common size income statement for 2015. Okay. So net sale, there is a 25 lakh in case of 13-14. In case of 14-15, 18 lakh, just write down, copy it from your book. Less cost of goods sold. You have to less cost of goods sold. Cost of goods sold means cost of selling price. Selling, okay. That is net sale, and your debit side in your 11th class, what is the cost of goods sold. Now there is opening stock, there is a purchase, there is other expenses, wages, some factory expense comes under cost of goods sold. So if you less from here, that is 12 lakh and 10 lakh. Now will net sale is 100% and this is also 100. So our basis is net sale. Okay, basis of the net sale we will calculate all the item. So basis is, so net sale we actually assume this is 100% and this is also 100%. Basis of net sale we calculate all other percentage. Okay. Now cost of goods sold. Cost of goods sold percentage 2013-14. What is the percentage? Now 12 lakh divided by 25 lakh into 100. Okay. Now this is 48% and this is 55.56. This is 10 lakh divided by 18 lakh. Okay. Now after doing this, what actually come? Actually come the gross profit. Gross profit. We get the gross profit after cost of goods sold, deducting the cost of goods sold. Now that is 13 lakh and that is 8 lakh. And again this also, the base is net sale. we have to calculate 13 lakh divided by 25 lakh and 8 lakh divided by net sale of 2014-15. What will be the percentage? Percentage is, this is 52% of net sale and this is 44.4% of net sale. Okay. Now again there is a operating expenses. So we have to deduct operating expenses from profit and loss account. We get the operating expenses. Manu sir, operating expenses. Now what is operating expenses? 1,20,000 and 80,000. So we have to deduct it. And what is the operating expenses? That is also basis of net sale. What is the percentage of operating expense? 1,20,000 divided by net sale is 25 lakh. You have to divide that. Then what will be the percentage? 4.80 and this is 4.44. Okay. Then we have to come deduct it. That will come 11 lakh 80,000 and that is come 7 lakh 20,000, that is current year, and this is also percentage on the basis of net sale, that is 47.20 and that is 40. Next is 40, that is 7 lakh 20,000 divided by 18 lakh into 100. So from here you also deduct, that is comes, what is actually come, that is operating income. After deducting the operating expense, that is come operating income. Now less non-operating expenses. Non-operating expenses. Non-operating expenses is depreciation. That is also again for complexity of the problem given here. Wages is comes under cost of goods sold. So you do not treat it individually, okay, because wages already comes under cost of goods sold and depreciation is comes under non-operating expenses. So 20,000, that should be less 20,000 and 12,000. And that also you have to calculate on the basis of net sale, that is 20,000 divided by 25 lakh, 12,000 divided by 18 lakh, that is 0.60 and that is 0.67. Now what will come after deducting it? After deducting it, it will come profit $11,65,000 and $7,08,000. And what is the total of that? As you are deducting here, you have to deducting the percentage also. From 52% 4.80, that is 47.20. From here you have to deduct the percent 46.80. And here also you deduct the percent 39.33. As you deducted the figure, same way you have to deduct the percentage also. You have deducted here, you have gross profit 52%. How can 100 minus 48, that is 52? Same way this. From there you have deduct the operating expenses. So this is the percentage of operating expense, you deduct come 47.20. Here also you deduct. Now come non-operating expenses. You deduct from operating income, that is 0.60, and come under profit, that is net profit actually come. Okay, so this is the percentage profit. So anybody can ask you what is the net profit percentage of this year. So you can easily say that is 39.33%, and last year it is 46.80. So there is a decrease. Okay, So there is a decrease of net profit in current year as compared to previous year. So what for it is decreases, you have to see, because though your cost of goods sold is not very high, but your operating expense also not very high, but your non-operating expenses is high, there is 0.61%. So you have to think about non-operating expense, so that it will be less, then the profit will be increases. So that type of analysis actually done by the financial analysis person. So this is a very useful tool, comparative common size income statement. This is one of the tool of analysis of financial statement, and we can easily compare any industry based comparison can be done. In one company 2-year figure can be done in basis of percentage. Okay, so that's all for today. Thank you for watching. Hope you are well and best in your home.